Hello traders and welcome to another video review. Today is Tuesday 29th of December 2020. We are going to take a look at the event calendar, and then of course we will do some technical analysis. So let's just swipe down towards today's date. As you can see, on Tuesday there isn't much data to be focused on because we got some BRC shop price index data from the UK, and then of course we got the Case Shiller 20 City index. This is data from the US, and it's scheduled for release at 3 o'clock p.m. and then 4 o'clock p.m. we got the consumer confidence data from the US, and as you can see the previous reading is 96.1, so we are right now waiting for the actual reading. It will have high impact for the on the Forex market. So right now there is only consumer confidence data left for the traders, and I think that because it's a consumer confidence data, we should take a look on the euro dollar and then on the pairs related to American dollar, like dollar to yen, dollar to Canadian dollar, and American dollar to Swiss franc. So let's do this analysis, this pairs. Let's start with the USD to the JPY, Japanese yen, and see what we'll have here. So the first is a broader picture. As you can see, we are trading below this orange trend line. We are still trading below it. We can even just there you go, adjust it a little bit here, and as you can see there isn't much going on from the bullish side. What I mean is that there is no increased activity of the bulls. We are still continuing this series of the lower highs and the series of the lower lows. Even the recent lower low that was made on the 17th of December 2020 still counts as a lower low. Of course, the main technical support, the main low of all of this situation and all of this trend, this downtrend, is located at the level of 101.22, because this low was made on the 9th of March 2020. So that's the key technical support, the key low. And I think that as soon as this low at 101.22 is violated, then this downtrend will actually increase in a volatility and in speed, so it will be more dynamic. If we take a look a little bit closer on the current situation on the USD to Japanese yen, we can see that the market is slowly bouncing from the oversold conditions, and recently we broke above 103.69 level. The next target is 104.2 level, but it's still, everything here is still, let me just adjust the trend line again, there you go, but it's still under the long-term trend line. We need to break above 104.75 level in order to make a little bit bigger correction or on this market, basically, right? So please bear this in mind, that that's not absolutely not the end of the downtrend. We are still trading slowly but still below the trend line, below the main technical resistance. So there is not much for the bulls right now, because the supply side has the control on the market. Okay, what about the Canadian dollar? The Canadian dollar, the situation on the Canadian dollar is very similar. What I mean is that the recent rally towards the level of 1.2928 has failed, and as you can see, even despite the fact that the bulls had made a new local high, because the high was at 1.2956, so it's about 30 pips higher than the technical resistance. The candle didn't close above this level, and the next day we got another attempt. It failed again, and then of course this is some sort of a bearish engulfing pattern, but it's not on the very top. It's just under the technical resistance, but it's still kind of a valid signal that says any attempt to rally higher above the 1.2928 is opportunity for the sellers to join the market and push the price lower. As you can see, we can even use this trend line now. The short-term trend line, which will be this one, right, is showing us that very little attention is being paid right now to the upper side. More attention is being paid to the downside, and especially to the level of 1.2782, and of course the lows from the middle of the December, 1.2689. So it was a nice pullback, but it failed at 1.2928, and now we are more likely go lower and visit and test again 1.2782 and 1.2689 on the USD to the Canadian dollar. So USD to the Swiss franc. Let's take a look at this one. Situation is very similar to the previous two pairs. As you can see, we are under the long-term trend line. The trend is of course down. We recently broke out of this very nice kind of a wedge, but it looks more like a kind of a rectangular pattern here. If you connect these two lines together, they are almost the same. Anyway, the low was made at 8,825 pips. Then we got a breakout. The first one failed. The other one was, of course, better. The price closed above the upper channel line, and as you can see, the markets tried to rally towards the recent highs. This is the high. I mean, it's the high of this candle. So it's 8,918 pips, and as you can see, it failed here on the 25th, and right now it's a kind of a again bearish engulfing pattern, and right now we are going lower again. So the main technical resistance right now, let me just make it red again for the resistance, right? 8,998 is still not touched. It never been tested or anything. So right now, of course, we are under this the main technical resistance, under the trend line, and on the daily time frame chart, it looks like we are going back towards 8,825 to test it again and maybe even breakout. The momentum didn't even move above 46, so it's still in negative territory. The sentiment is still negative on the USD to the Swiss franc, and it looks like we are going a little bit lower again. And the last one, I think we should take a look at the euro dollar, because on all of these previous pairs with the American dollar as a major, we could see that the dollar has been sold all over the board, and the other currencies has been bought. And the situation here is the same. The euro is being bought and the US dollar is being sold. So what I think is that we are approaching this level of recent high, 1.2259, and there is still a possibility for the euro dollar to break a little bit higher. It might be making though some sort of let me just point it out, kind of a broadening wedge pattern. It might, but it's a very rare pattern, so it's kind of a tricky right now to really get this scenario as a main one. But still, it can be kind of a broadening wedge pattern. But as long as we stay above this the 70 points RSI level, the RSI is still strong, right? And the sentiment is positive. The RSI is positive. It's strong, and the bulls have a really control over the market, so they will try to push it even higher in the 80 territory. That would mean we will easily reach 1.2350 very, very soon if the momentum will be that strong. The other thing is, as long as we trade above this short-term trend line or the lower wedge line, the outlook is still positive, and the key key technical level, the first one is 1.2060 and the second one is 1.2013. So I have marked this with my big blue candle. So the outlook for the euro dollar is still positive. Euro is being bought, dollar is being sold, and on the other pairs, it's a different. I mean, the market is going down, which means that the dollar is being sold and the other currencies are being bought. So there is not a good time for the dollar yet. So we are still going down on the dollar and up on everything else across the board. And I think that's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow with a new fresh one. So take care and see you next time. Bye bye.